Property listings crash by 30%. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee because we're going to have a look at this article from Mortgage Business discussing the, dramatic fall in property listings. The supply is going down. Now before we have a look at that, I don't want to do the outro. I want to have a look at some of the asking prices that are just, going along around the country at the moment. So we'll just jump here and we'll have a look. We can see this is the weekly asking prices for capital cities. And you can see how, it's obviously climbing up, guys. There you go, over $1 million. And once we include the regional areas, we can see they're climbing as well. And if we dive in a little bit deeper here, we can just jump in. You can see Sydney is going up. We can also see good old Melbourne is coming up, and then Brisbane as well. And if we go even further, you can see Mooloolaba has gone up too. It's quite dramatically as a regional example in New South Wales. So property is certainly going up. Now, what's this causing? This is a supply and demand issue. And let's just jump to the tablet, and I want to do a little sketch to explain this to everyone. Bear with me as I find my digital pen. Okay, so we've got a supply and demand graph, guys. Now, what we have here, I just adjusted this microphone. We have a 2-axis chart, everyone, and you can see that. Fantastic. Now, we've got two lines. We've got one line going this way, which is the demand. And we've got another line going this way, which is supply. Here you have price on this axis going up and down. And here you have quantity going left or right. So you can see there's an equilibrium point that's reached right here when quantity equals price. And this is when the market has determined that price and quantity are, have reached an appropriate level. So what happens? What happens if our supply changes, everyone? If the supply of property, say listings on the market, goes down, well, that means this supply graph moves over this way. So the quantity is going to reduce. So we've got down here Q2, and the price for our beloved property, it's going to shoot up. It's going to shoot up, everyone. And we could all agree that that looks like it's happening here. So let's have a look at this article with that in mind from Mortgage Business. So, housing supply is falling to meet demand as active listings record their largest year-on-year decline, new figures have shown. I'm just moving this microphone. I need to get it set up with a mic up here and down here when I'm drawing, but we'll get there. The REA Inside Listings Report, July 2021, has revealed that there was a 19.7% fewer active listings in June 2021 compared to June 2020, representing the largest year-on-year decline on record. This was driven by a 30.6% year-on-year decline in regional areas and a 6.9% decline in the capital cities. So we're seeing that huge decline in regional areas, guys, and we could see that in the prices of some of the regional property. Now, before we go any further, we need to remind ourselves who the REA Group are. They're a listed real estate advertising company or group, really. Advertising, research, that type of thing. So understandably, they're going to have a vested interest in drawing traffic and people to their site and to their property. So that's just something we need to keep in mind when we're looking at this. Could it be a bit of, excitement or interest to get them, get traffic or people visiting their site? So this has demonstrated the substantial increase in demand and subsequent sales of properties in the last 12 months, according to the report, which analyzes new and active listings on realestate.com.au to provide an updated view on property market supply and demand trends. There was a more noticeable reduction in stock for sale in regional areas in the past 12 months than in capital cities. There were more properties available for sale in capital cities than in regional markets compared to the same time last year. The research found that month-on-month Active listings declined by 3.3% nationally in June 2021, with listing levels reaching a new historic low in regional areas, down 2.6% month-on-month. The REA Group attributed this to buyers embracing buying properties outside of capital cities. National new listings fell for the third consecutive month in June 2021 by 5.5%, but new listings were up 19.4% year-on-year. So lockdowns are limiting listings in New South Wales and Victoria. The number of new listings in New South Wales and Victoria has likely been adversely affected by lockdowns, with Sydney and Melbourne and regional New South Wales and Victoria recording their lowest new listings levels since January 2021. As Sydney begins its fourth week of lockdown due to the latest COVID-19 outbreak of the Delta variant, new listings plummeted by 13.3% month-on-month in June 2021, but rose by 23.7% year-on-year, while active listings dropped 4.7% month-on-month and 2.4% year-on-year. New listings in Melbourne, which is facing another snap lockdown for 5 days, which was extended, plunged by 11.1% month-on-month, but rose by 17.3% year-on-year. Active listings declined by 1.1% month-on-month and 0.8% year-on-year. Most capital cities recorded a fall in new listings in June, but Darwin bucked the trend and reached its highest new listings volumes since May 2016, with a 162.3% year-on-year growth and an 11.1% month-on-month increase. New listings in regional Northern Territory are at the highest they have been since May 2017, up 71.7%. Hobart is the only capital city where active listings are at a historic low, down 34.3% year-on-year and 10.4% month-on-month, while Brisbane up 1.3% and Darwin up 9.3%, were the only capital cities where active listings increased over the month. Competition is driving up prices. Commenting on the research findings, REA Group Director of Economic Research Cameron Kusher observed that the fall in active listings in June has underscored the overall shortage of properties for sale, with insufficient new listings being added to meet demand. Properties for sale that were sitting on the market have now been bought up as new supply in June failed to meet demand, he said. It is reasonable to expect competition for properties for sale will remain strong, pushing prices higher in markets where active demand remains heightened despite seasonal slowing. And, well, I suspect we're going to see this. This isn't going to be uniform across all markets, everyone. One example that I like to draw attention to is the good old, variation in unit price growth at the red rooster line and goat cheese line. All this growth isn't universal. So there's going to be demand, and where we'll see it? We'll see it in housing, and we'll see it in the regions, and that's why some of these prices are just going insane. And it's so people aren't leaving the market, they aren't flooding the market. I mean, why would you sell if you really didn't have to now? I've heard stories of people selling and then regretting selling. They wanted to make all the big money, they wanted to make all the big profit, but they can't get back in. Meanwhile, there was a 3.7% rise in newly listed properties for rent in June 2021, but this was insufficient to meet demand, with active listings falling by 2.4% over the same period. Intense competition in regional markets due to shifting population is the primary driver of record low active rental listings, Mr. Kusher said. However, there are two very different rental markets playing out. Outside of challenged inner city and Melbourne unit markets, yes. The strong demand for rental accommodation is expected to see costs of renting continue to climb. So there we have it, everyone. Property supply crashes by up to over 30% in the regions. Rents are getting in trouble. So, well, what's the solution to this? I guess you're just going to have to wait, everyone. Or, how long can it last? How long can it last? How much money can the government throw at the economy to keep stimulating it? Well, we've seen, guys, trillions. As always, thank you all for watching. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for our affiliate links at Amazon, eBay, Independent Reserve, or Aussie Broadband. Use Self-Wealth or Stake for your share purchasing. Buy a merch from Heiser Says. Use Gold Pass from the Perth Mint or support us via PayPal. Take care. I'll see you next time. Bye for now.